Here's one big marathon, and as usual, our usual tradition, like we always do every week, always trying to look at market forecasts in preparation for next week, and try to look at the things that we need to watch out for, and try to understand how the previous market days actually played out. You understand that we are in the second week of January, the second week of the year 2025, and the market is still on the first quarter of the year. So here is DXY on a higher time frame. I will be doing a top-down analysis on it in preparation and give you guys my view on how I expect the market to move next week. I am using both the ICT and SMC strategy, and I'll be using mostly turtle soup for my entries. If you are new to turtle soup, you understand that turtle soup is just liquidity. It's just how you determine the next draw on liquidity, where price is going to. So we are using this entry strategy uh, or an entry model. You have to understand first of all that ICT is as a whole is a strategy, and turtle soup is an entry model by ICT, and it was quickly modified by Romeo. So we have been using the turtle soup entry model for quite some time now, and accuracy and the win rate, the probability of wins are very very high. So that's why sometimes you always see me I tend to dwell on it. If this is your first time watching my YouTube video, please make sure you like and don't forget to subscribe. So when I send videos like this, you get notified on time and you get to watch them before the market opens. And if you intend to join my community, the link in the description down below. So make sure you click the Telegram link to join my Telegram community. You also have my WhatsApp number if you want to get any information from me, or if you want to get more inquiries on how you can get my mentorship. My WhatsApp number is in the link below. And also, if you are looking for a very strong and reliable broker, you can set up your account and start trading with good market conditions. Excellence is down on the link below. So without further ado, let's jump straight into the video. So here, this is DXY on the 1 week time frame. From what we can see, you can clearly see that the profile is on the higher time frame, and the direction of the market is actually bullish. So we're actually seeing price coming down to collect some sort of liquidity and pushing back up. How do I know this? First, I have my directions here. This was considered to be an area in the market where the market got to a strong high, and ever since the market has been pulling down. So we're looking at the last high, the last low that happened before that real push to the downside. And from this level, well, I'm using my Fibonacci tool, from this level right up to this level up here, from the swing low right up to the swing high, you will clearly identify that the market tapped below the 50% range, the 50% of the equilibrium, and ever since it has been buying around that level. So the market has refused to go below the 50% range of the Fibonacci level. So we are on a discount zone, and on the discount we can see more demand. We are being active on that discount level. And once that happened, the market was ranging. Ever since the market tapped on that discount level, it has been ranging. And the final time that it tapped, we had a nice, sweet break of structure to the upside, causing price to push to the upside. So now, here is where we have our focus. Here is where we have our focus. So here, this is our swing high. Around this level, we have our swing high here. We have our swing high here, and our swing low here. This is the low that caused the break in structure. So what we're doing here is this. My focus is here. Now, when it comes to candle range theory, this will be considered a key level. And now, where is this key level coming from? Guys, this key level is coming from a 1 week higher time frame, right? A 1 week time frame. And we want to see price reaction when it got to that key level. The way the candle close on key levels are very important, right? We have levels. You see, this was a level. How did the candle close above here? The candle closed above here with a thick body. And by just knowing this, you can clearly tell you that price will likely continue. So this is where we need to understand the aspect of uh, candle range theory. The level was taken out with the body, meaning the level it got weaker, so price is going to come down a little bit to access the small liquidity that could be slipping downside before later on push to the upside. So once that happens, what you need to do so you can know whether price will either buy or sell is to look at the next nearest level where you have what? Where you have amount of inefficiency. So if you look closely down here, you can clearly see that there's an amount of inefficiency here. After price happened, there's an amount of inefficiency here. And further, if you look left again, is that this was supposed to act like what? A breaker block, because as at this level, we had price giving us lower lows and lower highs, right? We had price giving us lows, lower highs, lower low. So what we're expecting, another low here to come down. So now this is a double confirmation, and also this is a double confluence. Like you can say, this was supposed to be a supply zone, and what happened to a supply zone when it gets breaker? It turned to a demand zone. So this area here is a flip zone, or you can call it what? A breaker block, right? A breaker block. So this is a breaker block in the positive side, implying that price break the supply zone that was supposed to be for price to push to the downside. So it break and give price a bullish momentum. So now it's a breaker block to the upside, which is now supply turn demand. So you might be wondering what happened to price, because everything you do, guys, everything you do, there should be a reason for everything. Nothing happens random. Nothing is random in the market. You can't just say, the market was going down and then all of a sudden it started going up. No, there should be a reason. And your job as a trader is to find out that reason. What actually happened to price that it was dropping and then later start buying? So had it been you are following your strategy very well, this would have been a good entry for you in the market. This right here would have been a good entry for you in the market where you enter these longs and you're looking for next position to capitalize or get your sweet entries in the market around this area, right? So what happened again? This is now another key level here. I will call this one now our weekly high. Now we have swing low now here, the weekly low here. Everything below that level is liquidity. If price violates this level, then therefore it's coming for this area. Always understand where price is coming from and where price is going to. Those two factors will always help to tell you where is the next draw on liquidity. If you are still new here, you don't understand CRT, and you need a PDF or a notebook on how to understand the draw on liquidity, candle range theory, how to trade the various candle range theory, the 1 a.m., 5 a.m., 9 p.m., we're talking about 159, that is available. You have my WhatsApp number on the link below. You can get to me and get a copy of that. Okay. So now this is what I have on my screen. This structure now here. So I have this structure here. I know what this was. This was a key level. So now I'll go down to the 1 day time frame so I can have a little bigger view what I'm expecting in the market again. So this was the level, price came here, this was the Tetsu. Tetsu tap into this fair value gap. You see how when you refine your time frame, your entries, you get good, nice, clean entries. So from this level, you have gotten this nice, sleek, clean entry, targeting about 2,000 pips on DXY at that level. So this now a key higher time frame key level, and what are we seeing again? What are we seeing again, guys? We have seen that there is kind of close with the body, telling us that what? Simply telling us that price will continue going up. So what as a trader, what our job is to do what? Identify the fair value gap that was left behind by the market once that happened. This is the fair value gap, and below we have another block. So what has price done? Price never came just price never tap right deep into the fair value gap. So around here there's still some amount of fresh liquidity sleeping in the market. So around here we have this fresh liquidity sleeping in the market. So everything here is liquidity and price for 1 day come for it. So Now, on our higher time frame, I did send this setup to the group yesterday on Friday, prepare on NFP. I said when you're looking at this profile of DXY, you can clearly see that the market was actually pushing here, and we had this nice impulse push to the upside. And when the market got here, what happened? We started seeing some accumulation, right? We started seeing some accumulation, and then later on, the market pushed to the upside. So we have the distribution, accumulation, distribution. We always have accumulation, manipulation, distribution. The market always moves in three phases: accumulation, right? We have accumulation, manipulation, distribution. Accumulation, manipulation, distribution. So we are still to expect another phase of that accumulation, manipulation, distribution. And all in all, the market is always moving in three phases: accumulation, manipulation, distribution. I had a question from a student. He says he understands CRT and he understands that we have three phases. The first kind of always accumulate, another one will manipulate, and then the next will distribute. So now she was asking, what are those factors that are always influencing this? The answer is straight and simple to the point: time and price. At some particular time in the market will be accumulating. At some particular level of price, we have price might manipulate to go to trick traders that price might go to a certain price, that the market might go to a certain price, and then after you see the market coming down to a different level and then distributing to another different level. All of this is just to collect liquidity, creating liquidity and collecting liquidity back in the market. So now this is another level here. We have level that the market pushed. Now we have another structure up here again. After the market got to this high, it exhausted, pushed a little bit to the downside, right? So now our whole idea now that we're focusing on is going to be this price action that we see here. And for us to clearly see this, we go again to the 4 hours time frame, doing more breakdown so you can clearly see how we are starting from a higher time frame and we are breaking down on a lower time frame to get properly our entries. Look again the bigger picture of this. You can clearly see this here. You can clearly see here price accumulated, push to the upside. Did what again? Reverse again down to the leader side. Doing what? Creating that liquidity and coming for that extra liquidity. This was so because a lot of traders entered a buying position here. And they were happy, thinking that the market might go up. But one thing with the market is this: they will always like to create fake moves in the market. So a lot of traders that had buying positions sticking around this level, they got liquidated here. They got liquidated, and price came for that liquidity. And what happened to price when it came for that liquidity? We had another structure here broken. Again, what? With a body telling you that what? There are high chances of me going to the upside. And where do you think you see your next entry from? You need to look at poor price action. The moment you identify that poor price action, you clearly see that, of course, here at this level, we have a fair value gap here. And this also could be acting like an order block. So there are high chances price reverse back here and do some sort of pull back, collect liquidity, and then push to the upside. That is price. So around this level, we have liquidity, and we have areas where liquidity could be coming to. If it fails to collect from there, it's definitely going to come right up to this area, because we might be having the same scenario here. What happened before, which was supposed to be a supply zone, and now it's a breakout block. So there are other high chances that what price is going to leap from here and shoot to the upside. Now this is where your risk management comes in. Are you looking for to buy from here? Are you looking for to buy from here? If you are buying from here, you have your stop loss slightly below here. If you are buying from another part, you have your stop loss slightly below the other part. So if you are buying from here, this zone, you have your stop loss below here. If you are buying from here, you have your stop loss just slightly below here, and you're still targeting the next high. So how will you know which is the best one? Combine time and price. And when is the time in the market that will have huge volatility? We have huge volatility both in the London session and in the Asia session. So as a trader, you should be looking at these levels at a particular time and price in the market. Time is always important before price. That's why time will always come first. So this is my view on DXY. So what I'm looking for, I'm still expecting more bullishness in the market. I have some zones that price might still come to, like this another level here. I might just identify another fair value gap here. But like I said, for me to have a confirmed entry, like which zone will be valid for me, I need to combine time and price. And at a particular time, in price. I want to see liquidity being engineered. After liquidity has been engineered, I know that okay, this liquidity is enough for price to collect. After that, it will boom. But these are potential entry areas that price might likely come to. But the one that will be effective and will be high probability is that which aligns with time and price. So this is the view for DXY. If you've been watching up to this end, I want to give you a big shout out, and once again, just hit that like button, do some small appreciation by subscribing and also dropping a comment. And also don't forget to copy this link and share to all your friends out there that you will like them to understand and get this free knowledge, because this is a free knowledge, and the only thing you can do to help another individual, just as I'm helping you, is to do share this to them so they can get this view and prepare the market, and let's go to the market and make some money. So on the next one we have on our list is we are going straight to DXY. After GU, we are now going to look at Euro USD. From Euro USD, we'll probably look at gold. And I have a running trade on BTC. So if you want to see my analysis of BTC, make sure you stay to the end. Just like DXY, I'm going to start analyzing GBP USD on a higher time frame, which is the 1 week time frame. I'm going to take out every joint that I had on my screen, and you can clearly see what is the price action. You can see here for sure. You can clearly see this guy is in a downtrend. Why? Because we are seeing we have high, low, lower, high, lower, low, lower, high, another history repeating itself, repeating another lower, low. That is just price action. This is what the market is telling us on this weekly profile, right? So what do we see here? We had a break of structure. This is the high that caused the break in structure. So this is the swing high. Around this level, this is the swing high. And now, of course, here is the swing low. Beautiful, right? And from what you can see here, we can see we have Fibonacci levels. Price is playing above the 50%. That's price on the premium zone, meaning it's now more good for sellers to sell because they're making high profit. And from where you see price coming up, price just collected some liquidity. Price just collected some amount of liquidity, and boom to the downside. So where is the next draw on liquidity? Remember I talked about the book of draw liquidity. If you don't yet have that book and that PDF, make sure you do everything possible to have that book so you can understand what is termed meaning of draw on liquidity. Without understanding liquidity, you can never be a good trader, because liquidity is that one thing that pushes the market. Liquidity is that one factor, that one fuel that pushes the market to do whatsoever it's trying to do. So when you're looking at this market, you know for sure that this is a fresh liquidity sleeping here, and price is definitely going to come for that liquidity. So you're going to do everything possible to try to capitalize and gain to look at price when it gets to that level. Okay. So I'm trying to see how we can analyze this. So on the 1 week time frame, you can see this is GBP USD, and you have seen the level of liquidity that's sleeping in the market right here. So this is the data that I've got on the 1 week time frame. Now I want to put my focus here. So now I know this was supposed to be a daily high. So price collected that liquidity, and on trying to go up. Now you understand price and time, right? Price and time. I know you've been expecting here, this was supposed to continue going bullish to the upside, but you have to look at the bigger profile of what we are seeing in the market. There was an area of supply zone here. That's why price failed to push the upside, because you've been having a question, but price broke above where you expect to push the upside. When you look at the bigger picture, you identify that this is price and this is what it's doing. This is what it's doing. So this is DXY on the 1 week time frame. Let's analyze. On the 1 day time frame, what we can see here is this. Now I mark my key levels. Now things I want to see is this. I understand that this very well was another key level here, that a lot of traders came in and they were trying to buy from here. That is why you always need to look at the higher time frame profile of the market before you start seeing whether which is going to hold. But aside of that, price tapped here and we never saw a change in price tap or change in the state of delivery. This higher was still respected, and that gave us the reason why it's still coming down. This higher was respected Had it been price violated this high, then of course we have known this is now a change in the state of delivery. We now look at the fair value gap that happened with that to buy, targeting back this other side. So once that never happened, that high was respected. So that's the swing high, and now we're coming for the swing low. So now the market ended, taking out that level, doing what here? Breaking with a structure around this level, right? Breaking with a structure at this low here, this swing low here. So this is on the 1 day, and now we know where our next draw on liquidity is. So we can now forget about what we saw on the other side and focus like sweetly here. So we see this level here, price collected the liquidity that was sleeping here. This is a nice turtle soup that actually formed here. On the 4 hours, it will be very, very clear and easy for you to actually get that, because on the 4 hours, you'll be able to see that how price got to that key level. When price tapped on that zone, it created some area of rejection. And now you know that this right here was a break of structure, right? This right here was a break of structure. So everything right here makes sense. There's a reason why it's selling. So you have the swing high here and the swing low. Price got to that level. On our golden zone, which is from the 70% right up to the 88%, price got that rejection, right? So this was now a failure level where price was supposed to come and buy off here as they're going to the downside. But now that level failed from a demand zone back to a supply zone. So I'll take out my fifth level so it doesn't confuse you. So now this is actually the reason why the market was selling to the downside. Also, a lot of traders too also came and they were struggling to buy from here. What happened? That level failed and price break down below. As price broke down below, it started pushing to the downside. NFP was coming on Friday, and a lot of traders were actually looking to enter the market. Now we know fully well that this was a level that would mark on a higher time frame. So that level was now broken down to the downside. Had it been you have done your top-down analysis, you would have known where the next draw on liquidity is in this market. So I've seen price action. This was supposed to be a demand zone where price, a lot of traders were expecting price to bounce off from this level and started going to the upside. Bounce off this level and started going to the upside. But what happened? That level failed. That was supposed to be a demand zone. What happened to a demand zone when it failed? It turned to a breakout block, so it turned to a flip zone. Demand now turned supply. So NFP was coming. With the understanding of the draw on liquidity, we have clearly known full well that this area here, that's the next draw on liquidity, and this is where price is likely going to come to, right? So as NFP was approaching, price was doing what? Price was actually ranging. The previous day, like on Thursday, price was actually ranging. When the market opened on Friday, we saw that small manipulation. So the Asia range actually formed, right? So I'll take my Asia range indicator to show you how this thing actually works. The Asia range actually formed, and you see everything that formed in the market. That this area right here was actually price manipulating, and all of this area was the Asia range, giving us that manipulations in the market. So this whole area was the Asian range, and the news was due to come out on 2:30, 8:30. That's New York time for the NFP to come out. So understanding the next draw on liquidity, understanding just pure technical analysis, we have clearly seen that price was due targeting the liquidity on the downside, and this is the setup that I gave on my Telegram channel. So if you are following this video and you're not on my Telegram channel, this is something good for you to understand and get good advantage of seeing my setups before time. So this was a real move that actually happened, and price dumped to the downside, giving us a value of about 125 pips before actually stopping after the news. So if you would have understood how to actually break down the market like this, you would have clearly seen that, technically speaking, before the fundamentals came out, we have clearly seen the clear sell on GBP USD. So now this is now another break of structure here, break of structure around this level. So with GBP USD on this lower time frame 15 minutes, I'm going now back on the higher time from the 1 day for us to understand why this market actually sold to the downside. So what I was actually doing was just trying to show you how you could use the idea, the information of technical analysis to actually get this market. So this is it with GBP/USD, and on the 1 day time frame, again to bring you back to clear your mind with for you to understand without being blind on that high on that lower time frame move that we call the NFP. Let's continue back from the higher time frame that we were. So this right here, this level here again, liquidity collected, nice candle close below, indicating that what there's going to be more sales to the downside. So now we are going to look at what our Monday's high and our Friday's high and our Friday's low. Friday's high, Friday's low here. Alright, Friday's low. Now we go straight to the 4 hours time frame, understanding what we should expect. Now what I'm going to do is we're going to look at open areas of liquidity in the market. So let's just collect all this to be our low and where the market closed. There are high chances that the market will see continue going to the downside. But if you look a little bit further up, you still have some clear amount of liquidity sleeping here. Monday might open, Monday might open, and the market might go buy a little bit to the upside to clear this high up here. Because if you look deep inside, you will see that we have some sweet amount of liquidity sleeping here on the 4 hours. So what am I expecting? I want to see liquidity formation up here, and then for price to continue coming to the downside. So if you look closely on the 1 hour time frame, you clearly see that this was a poor price action, or there's a fair value on the left and also on the right. So we need to have that balanced price range. So what do I need to do? Why do I need to see? I need to see the market pull back up here. If it so happen and the market is around here during the London session, that's where you see me apply my theory of price and time. I want to see the candle range up here, collect this liquidity, and I want to see, this is my key level, I want to see the candle reaction here. And if I get that rejection here, maybe on the 5 minute or the 15 minute, I'm definitely going to take myself targeting the low. I can have my first TP on this low right here, and the other TP targeting the other higher draw on liquidity on the lower time, on the higher time frame, which is this one on the downside. So I have my points of entry, which is here for TP, and here for another TP. That is that Euro GBP/USD. We are moving to the next currency, which is the Euro USD. So on the Euro USD, let's start with the higher time frame view, which is the 1 week. Come to Euro USD. I remove all of my drawings and I position my screen. Let's have Euro USD on the chart. First thing I do is I need to understand the market profile. Just like GU, they move sometimes the same. Euro USD move the opposite of DXY. So what I say on Euro USD is this market is actually pulling on the downside. If you look this chart very well, you go to DXY on the 1 week, you see the complete opposite. So from what I am seeing, first I need to look left and look at the liquidity that was collected and try to identify the liquidity. As a trader, your job is to try to identify the liquidity and how was the liquidity collected. This was a supply zone. We have that nice clean rejection on the higher time frame, and then we had a break of structure. And from the break of structure, you can clearly see how this market closed below here. It closed below with a nice body, indicating that there are high chances of this market pulling to the downside more. So what I'm going to do, I'm going to look at open demand zones that was left behind by price, and we go to them and target them. The one we have here was a breaker block, and this level price rejected to that level and is now pulling to the downside. So what do we have here? We have our next high, we have a break of structure here, and the market actually pulling to the downside. Now this is where I have my next draw liquidity. This is where price is actually pulling down to. On the daily time frame, I want to see this. This is what I want to see. Now I've seen the structure. Up to the upside after collecting the liquidity on the downside. So this is the structure. Beautifully collected liquidity, price and time. See, this was the total. So that happened here. After that, the price distributed to the downside, changing the state of delivery. So this was supposed to be your entry to the downside. This level you have collected, broke down, close to the body, left behind the fair value gap, another sweet entry here for price to come to the downside. Now we have this low collected, I will have another high collected above here. So around this level, this could be the next level where price will come to, because if we look above here, we'll see a nice form of liquidity slipping, open liquidity, forms of double highs, an inducement. So now I have this as a break of structure. That's on the 1 day time frame. I have this nice area as a break of structure, and this upward area here. This is a key level that price violated. Now I know where it's coming from. So I have this inducement here, and that inducement is the liquidity. So the liquidity is the first of inducement. So this other block here was unmitigated, which is now a supply unmitigated other block. So it's unmitigated, so it is quite it's actually open for price to come back to that area. So prices collected this low. I want to see that rejection. If I see that rejection from here on Monday, price reject this level. If price reject this level here Monday, and we get that change in the state of delivery, I probably go to the 4 hours time frame. You see price tap on that low rejected. The market is playing here. So we have this level now sleeping on the 1 hour time frame. Possible area where the market might come to. So if you see price take out this high, it's definitely going to be a change in character. But trust me, sellers are more dominant in this market. I will advise you not to look for buy opportunity. Just wait to get that sell opportunity. We have a lot of liquidity sleeping in the market. We have this form of liquidity, another liquidity sleeping here, and you see you have an open price action here, right? Open liquidity sleeping above here again. So if you actually wait for price to come up here, you can get good sales from here to sell to the downside. If this one fails, definitely price is definitely coming to this other one right up above here, right? So these are some areas in the market where you should wait for price to come to. You don't force the market. This is what you are seeing with Euro USD. We are going on gold and see you on gold. Now we have gold. I would just like us to analyze gold on a daily time frame. So this is XAUSD. Let's look at gold on a daily time frame. DXY, analyze, Euro USD, analyze, GU, analyze. So last but not least, it's gold. And I promise I'm going to look at BTC. This is gold. We have a swing high. We have a swing low. And where is low coming from? Looking very well, you see that it actually collected liquidity around this level. So there's a fair value gap here. I always make sure you identify where the drawn liquidity is. So where is the next drawn liquidity? This is the next drawn liquidity. You have fresh liquidity sleeping above. So gold have a high potential pushing to the upside. Why? Because after price collected that liquidity from here, it pushed to the upside, change state in delivery, change the state in the delivery. And one thing with gold is sometimes it will always come to tap full into the liquidity, sometimes it won't come. So this after the change in delivery, we had a huge fair value gap here. So gold actually tapped on that fair value gap and gave us that push to the upside, which was this the change in the state of delivery also here. So this was another clean entry that if you were vigilant with gold, I actually set this setup in our morning classes. So always make sure you join the Telegram channel and you join the morning classes that we always have free every morning with all the traders. But since we are doing the market forecast, it is the same thing that we're going to discuss on the Monday classes. So with one mentorship and to understand how you can actually read a chart like this, make sure you hit the WhatsApp number down below. So this is gold. This is why prices are coming down. This is why prices are going up. This is the next level where price is targeted right here. So we have this area here. This was the supply zone that price acted, tapped into that supply zone and actually pushed to the upside. This is where price is actually going to, as simple as that. There's no need to be me pushing and saying this, that, and that. Gold on the 1 day time frame is giving us this profile. So now the question is this, coach, where do I look for my next entry tomorrow? Where are the possible areas that price could actually come down to tomorrow? Here it is. Break again further. When you're in a higher time frame and you're in the state of confusion, always make sure you zoom down. Zoom down means you go down to a more lower time frame. From what we can see here, we have multiple breaks of structures, right? We have another break of structure here. break of structure here. Price collected the week, rejected. We expected price to come down. There was an open supply here, this area here, price tap here, and actually pushing to the upside. Now this is another candle range high. We have liquidity sleeping here. Price collected the liquidity, pushed to the upside. Now it was time for NFP, and a lot of traders were actually anticipating what they were doing. Yes, the NFP data was clearly showing that, technically speaking, that it was going to buy. But I actually said in our class on Friday morning, I said there are high chances that price might spike. Price might spike. This was actually a high, and the reason I said price might spike was because after I spotted this high, I looked on my right and I saw that price collected that high with a body, right? If you go down to a 1 hour time frame, you see that price collected that high with a body. This right here was what I saw, and I tried to explain this. And I recently set up on the WhatsApp group. Price close here with the body. So I said price have the potential of actually buying. So if you were clicking the buy, we're actually good. But now you were wrong because you never looked at the lower time frame. Sorry, you never look at the open areas of liquidity. This is the low. This is the master low, right? This is the strong low that caused the break of structure to the upside, right? This low here caused the break of structure to the upside. So below that low is what we're talking about liquidity, and this is the reason why price spiked to the downside. Price spiked to the downside to collect that liquidity to the downside before actually pushing to the upside. And that low was considered protected low, and this is the reason why price spiked to the downside. Maybe you might be trading, or maybe you took the trade and you don't understand why price spiked to the downside. There was open liquidity, and liquidity is something that price will always like to come and collect before moving to the downside. So if you're wondering why gold spiked to the downside before going to the upside, this is actually the reason. There was enough fuel that price needed to come and collect on the downside, and that fuel was in the form of liquidity. So like we always say, make sure you see the liquidity or you are the liquidity, right? So that's my analysis on gold. So after price collected this liquidity, now this is now the swing low, and now we'll have our swing high, right? This area here, this low that formed here, swing low, and what do we have here again? Swing high. This is 50% of the range. Below that 50% of this range, we have some price action slipping down here. So to understand this, when you have areas where you have a bigger, longer wick, always go for 50% of that wick. That could be where you might see your other block. So 50% of that wick could be there from here to here. So entries, if you're looking for entries, you start looking for them around this area here. 50% of all of these area could be an area where price might reverse it. So I would like you to highlight this area and trying to wait for price to come down here. If you see price pull down a little bit here, then definitely you're going to look for the sweet buy from here, targeting this high. Always go with the trend, for the trend is your friend. That was very fast and quick on gold. This is my view on gold. I'm still expecting price to push the downside to continue with a nice bullish momentum, because gold still have high potential of pushing to the upside. So I understand that this is our next draw on liquidity here. This is our next draw on liquidity here. My next draw on liquidity is here, and another one is here. So, but I'll wait for price to come down here. If I'm to buy, I'll buy from here and target this area here for my TP. That is that gold. And on the last on my list, we have BTC. I'm actually on a long trade on BTC. I entered this trade since on Friday. I entered this trade on Saturday morning. So what I actually saw was this. I'll just go straight to the 1 day and do a top-down analysis and show you what I actually saw before I actually take that longs on BTC. So you look at BTC here. You see what they will have. You have a nice break of structure here. This is the strong low that happened before that break of structure. Another break of structure here. Another break of structure here with the body. Another high here that has been broken down. So if you look down below, this is the low. These are the lows that cause those breaks of structure. And you can clearly see here, you can clearly see that this low here liquidity was collected. How was it collected? Reject multiple times with a week. I go straight on the 4 hours time frame. On the 4 hours time frame, what do I see? Once price tapped on that my week, what happened? I had a nice clean change in the state of delivery here. So everything here is my order block. So this is where I had my nice buy opportunity, holding this trade till this is where I'm going long on BTC. Price tap on that level, collected liquidity, and now pushing to the upside. This is next high, the high down here. So price needs to come and clear this one. If price clears out with the body, it will tell me what to do. If price rejects here, then definitely there are some strong signs that this guy might actually react from here, because if you look above, there is an open price action. But I'm definitely seeing that this is definitely going to be a trap to log in traders, create accumulation, manipulation. And then when you see price collect this high with the body, and then reverse a little bit to the downside, collect the liquidity, and continue flying to the upside. BTC have a very high potential going to the upside. So these are my next draw on liquidity. This is where I'm targeting. So once that my level is collected, I need to see the level, the manner at which the level collects. If I see price break and I get what I want to see, this is the plan. If I see the plan, I'm going to add more position to continue buying BTC till get to the price of $103. 100,000. Like this need to go back to 100,000, 103,000 price, 103,000. That is where I see BTC going back up. But I have a level here for my first TP. I want to see how price will collect this level. And price get to that 78,000, 97,000. I want to see how price will actually close on that 97,000. If it close to the body, I'll use my candle range to knowledge, understanding what price is likely going to push the upside. So I'm going to scan for any open liquidity that might be resting below here to enter more position to buy to the upside. Ladies and gentlemen, I've come to the end of my market forecast. You can clearly see everything I've gone through. And again, I would advise you to go again and rewatch this video. Take down detailed notes on how I've analyzed and how I've marked my liquidity areas and how I've been able to identify this zone. Try to go on your own, do your analysis, and see if you come out to have the same result like me. If you have any question, my WhatsApp number is in the link below. Anything you want to do, every information is on the link below, from creating your account with Xness to joining my Telegram channel to getting my personal WhatsApp number. And you have come to the end of this video. I want to make sure you've clicked the like button, subscribe, and also if you have any question or just an appreciation, drop a comment on the comment below and tell me what you need to understand more so that on my next class I can emphasize on that. I always make sure I go through each and every comment you guys drop, and I always reply everyone. Giveaway will be coming for the best commenter, the best liker, the highest engagement. So to win my giveaway, make sure you copy the link of this video, post on your WhatsApp, on your Snapchat, on your Instagram, and make sure you mention me. The top 5 will get 5K from me each. See you on the next video. It's one big marathon. Signing out.